Is the housing market finally on the road to recovery? Now, what can we expect in 2025 for home sales, prices, and mortgage rates? Let's dive into HousingWire's latest forecast and what it means for you. HousingWire anticipates a 5% increase in existing home sales for 2025, reaching about 4.2 million transactions. The National Association of Realtors is even more optimistic, projecting a 9% rise in home sales. Now, this suggests a positive trend in market activity, though still below pre-pandemic levels. Home prices are expected to appreciate modestly by approximately 3.5% in 2025, according to HousingWire. NAR forecasts a 2% increase in home prices for both 2025 and 2026, indicating a stable market without significant price drops. Inventory, on the other hand, is predicted to grow by 13%, peaking around 800,000 unsold homes in October, and ending the year with around 720,000 homes. This increase in supply could help alleviate some affordability challenges, especially for first-time homebuyers. Mortgage rates are anticipated to ease slightly, remaining between 5.75% and 7.25%. Pretty big spread there. Now, Fannie Mae predicts a 30-year fixed-rate mortgage of 6% by the end of 2024, so not much time left to hit that, decreasing to 5.6% by the fourth quarter of 2025, which would be a pretty big drop from where we're at now. Now, the Mortgage Bankers Association expects rates to decline to 6% by the end of 2025, so a little higher in that prediction. As of September 2024, Minnesota's average home value stands at $334,240, reflecting a 1% increase from the previous year. However, the Minneapolis market has actually experienced a slight decline, with 1.6% decrease projected by August of 2025. The number of homes sold in Minnesota fell by 10.5% year over year in September, while the number of homes for sale rose 9.8%. Now, this indicates a cooling market with increasing inventory and decreasing sales. Despite the decline in sales, home prices in Minnesota were up 3.4% year over year in September, suggesting that demand still outpaces supply in certain areas. President Trump's administration plans to reduce regulations and open federal land for housing development, aiming to increase the housing supply and address affordability issues. The administration's economic policies include tax cuts and infrastructure spending, and it could stimulate the economy, but may also lead to higher inflation and government debt, potentially resulting in higher mortgage rates. There is a potential bipartisan support for initiatives like a low-income housing tax credit, which could benefit affordability in housing development. Despite these positive indicators, affordability remains a significant issue. The combination of high home prices and elevated mortgage rates continues to pose challenges, particularly for first-time homebuyers. The Federal Reserve's recent interest rate cuts aim to stimulate the economy and prevent rising unemployment. These cuts are expected to lower borrowing costs for credit cards, auto loans, and mortgages, although noticeable consumer effects may take some time. It's important to note that these forecasts are national averages, and local markets may experience different trends based on regional economic conditions, housing supply, and demand factors. While 2025 shows promise for a gradual housing market recovery, challenges like affordability and regional disparities still persist. Stay informed about your local market conditions, and if you're considering buying or selling, now is the time to strategize. What are your thoughts on the housing market direction? Share your insights in comments below.